Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Friday, April 24th, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. The S&P 500 was up 1.39% today, and we closed at 2836.74. What we're looking at here for the first chart is a year-to-date chart of the S&P 500. Each candlestick represents 1 day of trading, and what we can see here is the support and resistance lines and the trend line. So I wanted to quickly cover this before we move on to the other charts. So you can see here this double blue line here. This is 2845 and 2855 on the S&P 500, and we'll take a look at why that's so important here in just a second on a longer chart. But a lot of overhead resistance right here, and you can see that we got stopped right below that level today, again closing at 2836.74. And you can see here this uptrend line that we had for a few weeks coming off of what so far has been the bottom on March 23rd, and we've broken beneath that line, and we're trading sideways here, so we'll talk about that as well. Now we're looking at a 3.5-year chart of the S&P 500 where each candlestick represents 1 week of trading, and what we can see here is this 2850 line, which again 2845 to 2855 is kind of the range, and you can see there's going to be a lot of overhead resistance on any attempt to rally above this 2850 area. And you can see here where we're at right now is basically the same place we've been trading at since January of 2018. So we really have made no progress so far for over 2 years on the S&P 500 based on where we're trading at this point. And again, you can see here for the week that we're actually negative, and we'll talk about that here in just a second. For the last 2 weeks, we know that we've been going sideways between about 27.27 on the S&P 500 on the low end and about 2850 on the top end. We had a few hours where we traded above 2850, but most of the trading has been between 27.27 and 2850 for over 2 weeks now. This chart, what we're looking at here is the SPY, the SPY, which is the largest and oldest ETF that gives us exposure to the S&P 500. Of course, the S&P 500 as an index is uninvestable by itself. The reason I'm using the SPY, the SPY ETF, is to show you that the volume has been falling over the last few weeks as the market has been going up. That potentially sets up a negative divergence. And so let's take a look here. Let's actually draw a line across this volume just to see where we're at compared to what we have been experiencing as the market has gone up. And what we can see here is this is the lowest volume day. So today, Friday the 24th, on the largest ETF that gives us exposure to the S&P 500, this was the lowest volume day we've seen during this entire correction, and the volume is about average, maybe a hair higher than what it was in January and February, but not substantially so. But as we can see here, the volume, let's just go ahead and draw a trend line here real quick. The volume has been falling as the market is going up, okay? So potentially that sets up for a negative divergence. We would want to see if this rally, is going to sustain itself and keep going. It would be better to see up days on up volume, not up days on down volume. But again, we can see that the volume has actually been trailing off as the market has been going up. For the week, the S&P 500 was negative 1.32%. So, I think everybody's under the impression that the market continues to go up. And as we know, really for the last several weeks, we've really just been going sideways in this trading range. So when we look at the performance of the S&P 500 for this week, we were down 1.32%. And we can see that there was only 2 sectors that were actually positive for the week. The communication sector up a little bit more than 0.5%, and the energy sector, which was up 1.86%. But the energy sector has been absolutely bludgeoned and is actually lower than it was 10 years ago. So I wouldn't get too excited about the fact that it actually had a positive week after being substantially beat up for quite a while now. Also, I want to point out that coming into this downturn, right, we peaked on February 19th of 2020 in the S&P 500, but coming into this downturn, it's not like we've had global tailwinds. We've been fighting some global headwinds, and many markets around the world peaked in 2018. So what we're looking at here is this same chart, 3.5-year chart of the S&P 500, except now what I've done is I pulled off the support and resistance levels, and I've overlaid the MSCI World ex-US Index. So this black line, right, that's overlaid on top of the S&P 500 represents the globe, right? 22 developed countries, over 1,000 holdings, about 85% of the investable market cap of the rest of the world, minus the United States. So what it does is it helps us understand what's going on in other markets outside of the U.S. And in the aggregate, what we can see is the global markets peaked back in January of 2018. Okay, so that was the peak in the MSCI World ex-US Index. And as you can see, we had global headwinds, not tailwinds, coming into where our market peaked here. Also, same chart, except now what we're looking at is the Russell 2000. Of course, that is the U.S. small caps, 2,000 small caps right here, domiciled in the U.S. And what we can see here is that index, the Russell 2000, actually peaked. That peak here is a little bit higher than this one, all right? But the Russell 2000 peaked in 2018 as well, all right? Where the MSCI World ex-US Index peaked in January, the Russell 2000 peaked in the summer of 2018. But all the same, you can see that we had weakness coming into this downturn, not strength, all right? You can see that the Russell 2000 tried to regain its peak from 2018, but it fell short, and the Russell 2000 actually started rolling over in January, where the S&P 500 and the large caps held up until February. By showing you these charts, I just want you to understand that, yes, we're off of the lows, so we are off of the lows here, but we're not out of the woods by any stretch of the imagination, and let's take a bigger picture and look at what's been going on and what was the market really like on a global scale and even here in the United States before this downturn. And we were starting to see weakness in the markets for several years before we hit this peak back on February 19th. So just be careful. Don't be overly optimistic. Yes, it's great that we're off the bottom here, but we're still fighting some major headwinds here, guys. Okay? Please remember to subscribe to this channel, give me a thumbs up on this video, and check out some of my other videos on my channel. I have a lot of great educational videos, market-related videos on my channel. Also, if you are a financial advisor or an individual investor that manages any of your own money, including in your 401k, your 403b, your IRAs, or your trading account, I would highly encourage you to take a serious look at Simple Market Signals, which is my personal risk management model that I have now made available to the public. For those of you who would like to learn more about how Simple Market Signals can help you in both up and down markets, here is some additional information. Please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. The Simple Market Signals product is a weekly newsletter that contains our proprietary market signals. The newsletter is emailed to our subscribers each weekend. Our goal is to have the newsletter to our subscribers by no later than 2 p.m. Eastern Standard Time each Saturday. You will also, as a subscriber, receive special midweek updates when warranted. So that is whenever there's a major signal or direction change, and that will make more sense after you go through at least one or two of the videos that we're going to introduce here in just a second. And guys, keep in mind that Simple Market Signals, this is not for day traders. So if somebody has a really short-term time horizon, Simple Market Signals probably is not going to be for you. Simple Market Signals is for investors and traders with at least a 6 to 8 week plus focus. So as long as an investor or trader has a time horizon of at least 6 to 8 plus weeks that they're focusing on, then Simple Market Signals is going to work extremely well for them. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. So we give you the first 2 weeks so you can take a look at the newsletter, see what we do. If you don't like it, you have plenty of time to cancel without being assessed any fees at all. So we have made this as risk-free for you as possible. If you would like to learn more about Simple Market Signals, I have the following videos on my YouTube channel. I will also leave a link to these videos in the description box below this video. First off is the longest video. It's about an hour long, and it's the Successful Investor webinar. It's the entire story of Simple Market Signals, including my background and why I feel that most people are going to need Simple Market Signals going forward. There's a tremendous amount of market education in this webinar. So I would encourage all of you to go out and watch this because it is extremely educational, and if nothing else, it'll be very thought-provoking when you watch this webinar. So I would encourage you to do that. Again, that video is out on my YouTube channel. I will also leave a link to this video and all of the videos I'm going to introduce here over the next couple of minutes in the description box below this video. Now, if you want something a little shorter, about half an hour long, introducing Simple Market Signals, it has a lot of the same information as the webinar, if you will, but I cut it down to make it fit into a smaller time frame. So it still gives you a ton of information. It's just not as inclusive. So if you're not interested in investing the whole hour, which I would encourage you to do so, but if you want something a little shorter but still very informative, introducing Simple Market Signals would be the video you would want to watch there. And if you want the cliff notes, right, you want something that's less than 10 minutes long and gives you more information about the signals and the newsletter, which of course is how I deliver the signals. My proprietary signals within the Simple Market Signals model are delivered in the weekly newsletter. The newsletter has a ton of really valuable information in it every weekend over and above the proprietary market signals. But if you just want to kind of focus on the signals and the newsletter and what's in the newsletter, you'll want to watch the Signals and Newsletter Quick View, as I call it. And then if you want more information about the process, about what it looks like, when you subscribe, when you go out to the Simple Market Signals website, what does that look like? And it walks you through the subscription process and then what you can expect from there. This video will help you with that. And if you want some testing and you want to see some charts, right, in a video format of how Simple Market Signals would have worked in the 2000 through 03 bear market, keep in mind I worked on the model for over 20 years and it finally came together for me in 2017. So this is back testing, but it's very accurate because I was able to just go back, look at the charts, and figure out with the model where the signals would have kicked in and where the signals would have changed. So if you want to see the back testing I did on the bear market from 2000 through 03 and how Simple Market Signals would have helped you, the video here, S&P 500 2000 through 03 using Simple Market Signals, is the video you will want to watch. And then I did the same thing for the 2007 through 09 bear market. So again, there's a video on that. I started using the model in 2017, and of course 2018 was a pretty tough year in the markets. The markets were negative that year, and if you'd like to see how Simple Market Signals could have helped you in 2018, I've made a video on that as well. Again, all of these videos are out on my YouTube channel as well as linked in the description box below this video. And if you'd like to know more about my background, I have a video titled My Financial Services Background. It's about 3 minutes long, so pretty quick video, but it will give you my backstory. And I would encourage all of you to watch that video as well. And of course, if you'd like to go out to the website can be found at https://simplemarketsignals.com. And that is the website you will need to go out and subscribe to Simple Market Signals and receive our weekly newsletter, which will include, of course, our proprietary market signals.